Tackle today, Justice Brothers from Tackle Trading, bringing you all the charts, news, and analysis so you can be informed in just a few minutes on all your trading decisions. Listen, we have extended conversations of this tackle today in much more depth, answer questions in our Traders Lounge every day. That, along with all of the other things you get as a pro member, is worth going to tackletrading.com and signing up for that 15-day free trial. Now, Matt, we have, let's see, North American trade war over, the trade war with China starting, something going on with Europe, a lot of trade war headlines. Markets attempting to recover back into that upper end of the range as we start the week. Matt, what are you seeing on the technical?
Yeah, I'm seeing the market trying to recover from a technical perspective. The gap down yesterday was obviously concerning as you did get underneath this cluster of moving averages in the short term. I will say one quick word on moving averages. When they are flat, they are not as important working as those moving averages, those moving areas of support and resistance. But you look at it and it would be an improving condition and basically wipe out the volatility from yesterday's tariff announcement if you do get back up above that 9 EMA. Now, I will say this. The tariff announcement recovery is not just the gap in price, it's the selling behavior, as we were talking about that 610 price action. And so whenever you have this unexpected volatility, it certainly dirties up the joint from a technical perspective. There's no doubt about that. Volatility is the kryptonite of technicians. And so what you absolutely need to see, it doesn't mean there's not good trades out there and good opportunities, but from a general market perspective, when you're talking about where does it get easy? Because there might be good trades out there, but it doesn't mean they're easy right now. Easy is when the trends are united, the market's participating, and the sector conversation is a very easy conversation. Right now, I do believe that there's a little bit of difficulty or complexity in the technical conversation right now. And so what makes it easy is when you work back up into resistance and then get back into that bullish breakout conversation, or two, you work all the way down into support and you start working out of working into reversal situations. So right now, price trying to recover from that gap down from yesterday, and rightly so. Obviously, over the weekend, there was expectations of tariffs coming on Mexico, Canada, and China. As of right now, this very second, as we talk, it's a fluid situation, certainly could change. But as of right this very second, the tariffs on Mexico and specifically Canada have been delayed as negotiations set in between those two countries and the Trump administration. Whereas on China today, China tried to pick up that big stick a little bit, and they slapped 15% tariffs on certain products coming into the United States after we did an additional 10% tariffs on China as well. Fully expect a deal to
be between. And if you had not as bad as expected retaliation on your tariff bingo card, you can mark off that box. That is a classic 2019. Oh, they did something, but it's not as bad as expected. Rally in China.
And they left it loose on specifically what they were targeting, and so it's kind of open ended on that. But don't you have to see the last 24 hours as a little bit of an alleviation event? And now we
of course you have to.
Going to talk about this week anyways, and that's earnings.
Yeah, no, that absolutely an alleviation event. Now, there's going to be many chapters in this saga moving forward. But course. Matt, to be honest, the tariff thing, I'm just expecting that. I've already moved on in my mind. I know that tariff headlines are going to create volatility at different times. Sometimes that will be to the upside, sometimes to the downside. And I'm moving on to other considerations.
We know there's a deadline in a month. Right. That's what we know right now. We don't know if there's going to be any other announcements coming in relatively soon. Obviously, there could be some on Europe down the road a little bit as well as but we do know there's that deadline in a month from now. So obviously that will kind of be the target date of the next volatility pocket in trade war history.
Yeah, on the economic fronts, jolts the job openings, economic data. Now, I want to say I think about FedSpeak. FedSpeak this week has been very hawkish. Matt, your boy Goolsby even had a hawkish, statement today. Bostic was hawkish yesterday. It's been very much cuts aren't coming anytime soon type message from that. Now, if we get labor market data to miss significantly like Joel's job openings this week, that tune might change really, really, really quick. Joel Smith
And also Fed speak coming in after a weekend where we're talking trade wars.
Mhm.
Like I think you got to bring that context into the equation, because if trade wars don't become as big of a concern for the Fed as it was, because there was concern there on the inflationary side of the equation, well, doesn't that alleviate a person like Goolsby pretty quickly?
Yeah, it does. It
Yeah.
does. And so,
I
economic
just want to add
data,
that context for the.
but and the thing about manufacturing data is in contraction. This is not the first time we've commented on that. This is something we're going to write about in the Tackle Trading newsletter this weekend. It's a sneaky story, especially for certain industries that benefit from manufacturing. It is worth noting, worth conversing about. In our newsletter this weekend, we will write about that. Wanted to point that out though, because it's a reversal of trend in that data.
Yeah, manufacturing getting it above contraction territory is obviously a positive step in the right direction. And ISM services has always been a positive for the market in the last few years. Manufacturing has been the concern. And so I think this is the second month in the last 6 or something that we've had above 50 on the data, and that shows expansion versus contraction. That's a positive step, especially if you're going to get some alleviation out of the trade war.
Stocks in the news, earnings. What do you got for us?
Yeah, we got a couple stocks in the news here today, but it's a Palantir day. It's a Palantir conversation, and it might just be a Palantir world here. Palantir reported very good growth out of commercial, very good growth out of government as well. Both were up over 50% year over year. But on the raw numbers here, they came in at 14 cents. Expectation was 10 cents. So they're going to start off with a pretty decent beat on EPS. Revenue did come in a little bit in line, but it was up 16% in totality year over year. The where you see gap out situations like this is typically not on raw numbers, not even on a doubling of the EPS number. Do you typically see this? It's usually on the guidance side of the equation, and they guided up obviously as revenue guidance was increased by 8%. Full year revenue guidance was increased by 6%. And beyond that, the numbers themselves are really good, but beyond that, the commentary coming out of Palantir is just lights out. Just we're doing things never done before type stuff. And so Palantir, obviously part of the AI gold rush watch list. It's a tier 2 stock in the AI arms race. And what one thing I did like about the conference call and the discussion coming out of Palantir here today is they're not shy about what is going on in the AI arms race with China. They're very open, they're very direct about it, and they're very ambitious about winning it. So Palantir, hats off to you. You had a great report here today. Gap
Yeah,
out.
they said we're at war with China. They were, and they called a spade on this one, right?
I've been saying that for a year. I've been saying we're in an AI arms race for a year. We need to act like it. We need to treat it like that. And Palantir, one of the reasons I really like this company is their CEO and downstream. They take that conversation extremely seriously.
Yeah, absolutely. What else you got for us?
Yeah, we got a couple healthcare stocks here today, and Merck and Pfizer. Healthcare trying to hang in there in a high base, mid-tier breakout type situation. Merck comes in today, and they just reported a bad report here. They did officially beat on EPS, but a paltry beat, 1.8%. Revenue came in at 15.6 billion. It was up 6% year over year. That did exceed estimates just a little bit. And so why the gap down? Well, rinse and repeat the Palantir conversation. Merck guides down, you guide down, you go down. It's simple as that. Merck gets blasted here today on guidance falling a little bit short of that expectation. And so a little bit of gap down situation, but not a runner. Did it catch anything? Did it find anything? Not really. You do have a support level right there around that 85 level. But again, this is a nasty gap down situation on the lowering of guidance. Typically, that does find a secondary pattern to look on the downside. Pfizer on the flip side, they kind of got crushed a little bit, but not a gap situation. They just broke support and then started selling down. They should, you do have a pretty decent support level right around the 25 level on Pfizer. When you're looking at Pfizer, This is not a bad earnings report. I think they're getting a little bit of the negativity out of MRK here today. They actually came in with a 30% beat against expectations. Revenue was up 24%, and they reaffirmed forward-looking guidance. So obviously, the secondary news plays a little bit here, but no gap down, just a sell down behavior. Does look like it wants to come down and test those lows around that 25 level. So if Pfizer is your thing, typically it's a covered call or nothing thing. But if Pfizer is your thing, keep an eye on that 25 level.
Yeah, fantastic. You know, some pharmaceuticals and some futuristic companies.
Future, baby.
Is a nice base. Listen, precious metals looking good, continued. Starting to get a little stretched on gold, but gold miners, silver look great. You know, those are kind of the stories in commodities as we close out tackle today.
Yeah, a little bit of stretch ranged up on gold, no doubt, but the recent multiple time breakout is a very powerful breakout. Just a little bit of overextension there. Would be looking at that as secondary development on GC itself. When you're looking at the GDX ETF here, real good development around that $40 level, looking pretty good on GDX. Silver looking very good on a potential breakout. Now you're talking about that next level of resistance. We've been tracking this silver break ever since the hammer candle off this
About 10% ago.
Yeah, about 10% ago, we were talking about that in the Traders Lounge quite aggressively as a front running candidate. That's why you should come to the Traders Lounge every single day as a pro member of Tackle Trading. We have awesome conversations. We break down every aspect of the market. We break down your charts. We answer your questions. You got a trade, we take a look at it. You have a management question, we take a look at it. You want to talk about anything under the sun, typically except politics, we're your huckleberry. And so come join us in the Traders Lounge. We're going to have a lot of fun here today as we break down the market.
Yeah, have a great day, everyone.